following in Tesla's tire track, so to speak. Electric vehicle company Lordstown Motors is seeking approval in Ohio to sell its vehicles directly to consumers. It also just announced a large order of 100,000 vehicles. Let's bring in Lordstown Motors founder, chairman, and CEO Steve Burns to tell us more about this all. Steve, great to see you again.
Thanks, Melissa. Thanks for having me.
I want to ask you, start off with the Endurance, which is the all-electric pickup vehicle. You've started to build the beta prototypes. Are you still on track for production in September? And what could be sort of the I'm going to say roadblocks potentially here to a September start?
Bumps in the road. Well, you know, we're standing up a car company from scratch, and we're going right for mass production. So there's a lot, but we, you know, the betas are, when you build in betas, you're 97, 98% of the final vehicle, and we're building those now, and they're on track. So we're on track for September.
Will we see the betas? Will we see the betas actually operational? Somebody actually driving the betas not rolling down a hill, for instance, et cetera, to know that there is a vehicle that is actually being built, even if in beta?
Yeah, we think it's really important to be, since we are a pre-revenue company and we're a public company and we don't have the normal metrics like revenue yet. So we want to leave a lot of breadcrumbs for investors and customers to see. So we've been showing the prototype in action. We have a skateboard, it's kind of a naked chassis without the body on it, so you can really see how these hub motors work. And then we're going to be very transparent on the betas as well. An automotive company normally doesn't, because of course you're going to have, you know, you're building these to test and finalize and crash into the wall, and of course there'll be hiccups, but we're gonna show them proudly. We're so excited to be at this point.
Yeah, this is a very crowded space now, Steve. It seems like everybody and their brother wants to be in this sort of business. Brothers being Rivian to General Motors. Morgan Stanley recently initiated coverage of your stock with an underweight rating. This analyst is a very respected auto analyst, and I'm wondering if you have any response, because part of the underweight rating is that he expects that for many years at least, Lordstown to be a relatively small volume manufacturer that will absorb a high amount of fixed costs and face execution risks, especially when you're going up against legacy OEMs like a GM or deep-pocketed competitors like a Rivian. What would you say to those criticisms? Because they are very real.
Yeah, I think that's conventional thinking. This is a billion-dollar business typically to get into, and typically people are very late in their projections and when a vehicle comes to market. So what makes us different is, first of all, our vehicle is very similar to a conventional pickup truck, so we didn't get too radical there. So we didn't have to reinvent the wheel. Very well-known science. So we could focus on our drivetrain, our battery pack, our software. Secondly, we bought a 6 million square foot plant from GM. I think it's the third most productive plant in the United States. But what's really different is we bought it completely intact. And that plant had been making up to 400,000 Chevy Cruzes a year. So it's a very capable plant. We're building a giant gigafactory inside of it, our own battery pack, so we can control that cost. So we're really vertically integrated, but we don't have the normal billions. And because we're starting with a pretty well-known product, if you look at a Tesla, let's say, they had to start from scratch. A Rivian that you mentioned, I think their vehicle is from scratch, like no other vehicle. When you do that, it is billions and billions and years. But we really, to be there first, we really want first mover advantage, first electric pickup truck. This is a full-size pickup truck for fleets. So they were happy with the bed and the cab and steer wheel and brakes. So we went with all that. Yeah.
And in terms of the September timeframe for full production of the Endurance, Steve, do you have enough liquidity to get you to there from here?
Yep. We've been really maniacal about that, and we're on track.
Okay. Steve, hope you'll keep us posted. Good to speak with you.
Absolutely. Thanks, Melissa.
Steve Burns, the CEO of Lordstown Motors. Brian Kelly, I know you didn't miss my reference there to Nikola in terms of having a car that actually, or vehicle that actually works on its own without being propelled by gravity down a hill.
Imagine that, not having a soapbox derby car. That's just a novel business idea, having a product that works. I think it's interesting. There are some really interesting thing that Lordstown is doing. They're keeping it simple, but I think what investors need to know, as Steve said, this is a pre-revenue company. So if you're investing in this, you are betting that they are going to hit all their metrics. And your risk is that they don't hit their metrics, or that they need more capital, as you asked them about. Do they have enough money? Those are all real risks out there that investors should know about before they get into this car. It may not just be betting on an electric vehicle, but you're also betting on the execution of a company.
Yeah, particularly when there are other bets in the market that you could choose to make instead, Delano. And so I asked you that question. Where would you place your bet, so to speak?
I like the whole industry as a whole. The electric vehicle market is obviously something for a younger investor and someone that has a higher risk profile you can take bets on. So I like Tesla. I've also been invested in NIO. So this is an area where I like. And I think, with what was said by the CEO, it makes sense to, take a hard look at Lordstown as well. And these are all areas that for younger investors with a high risk profile, as was mentioned, if you understand that metrics have to be hit, and if it's you understand that they're pre-revenue, but you can get behind going through the volatility as a younger investor and someone that likes to take a look at the high growth possibilities, I actually like it.
Shepard Smith here. Thanks for watching CNBC on YouTube.